Good morning, everyone. It is Wednesday, April 7th, and this is Nadex Morning Analysis. My name is Todd Rich. I'm with Nadex. Joining me, as always, from Keep Trading Simple, my good friend Brian Caprice. Before Brian and I jump into hot spots to look at in the markets today, where you might want to be focusing your efforts for short-term trading opportunities, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And that this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. All right, so it is a quiet Wednesday in spring. Markets are opening slightly lower. The U.S. equities are looking a slightly lower open. But really what we're going to be looking at today, there's a couple of things. There is an oil inventory report. Oil is definitely a supply-demand driven product. So last week when OPEC said that they would start easing production curbs, it definitely moved the market and caused some fairly significant volatility. Today
job.
we're going to get a glimpse at what the supply situation looks like in the U.S. with the U.S. Inventory reports. And then in the background, there's always this demand component. We've seen an uptick in COVID cases as everyone is climbing and clamoring to get out. But we've also got the vaccine rolling out. So what that ultimately means is what's going to happen with the pandemic, and will we get things opening again and pushing the economy along more quickly, or are we going to have to pull everyone back if we end up with another wave? So that whole supply demand thing is going to keep oil in play for probably a while. So we'll talk about oil today, and then the FOMC is going to release their minutes later today. There, we're going to be picking it apart for language, looking for what they have to say and how they're positioning things with the U.S. economy and the recovery, and what that might mean for potential interest rate moves, and how that might impact the dollar. So that's what we're going to look at today. Just wanted to sort of tee that up. So let's kick it off. Brian, you want to kick us off and start talking about oil, the report, and what we're looking at?
Yeah, the big number today is obviously going to be the oil inventory report. It's miraculously, you don't really see much about the Suez Canal anymore. Or, the canal is kind of, people getting stuck. You don't hear it, right? So again, now it's all going back to what recovery looks like. There is a G20 meeting today to talk about pandemic measures, so that will have some effect later on today. Although you can see the headline over here, it talks about the U.S. global minimum tax. It's one of those things. I don't know why the U.S. just wants to tax everybody. Go ahead. The little one is up.
I love when Jen joins us.
Yeah. Yeah, she's potty training herself. I can tell her to go potty, but she brought it to me to inspect it. I guess she wants her treat afterwards. It's like the Pavlov's dog with like chocolate chips, right? But anyway, so we're seeing some movement with the dollar right now. Actually, really, it's with the pound. The pound is getting just slaughtered. Pound dollar down 76. Pound yen down 82. Euro pound is up 82. So again, we're seeing that continued, really kind of major pound weakness right now. But overall, the dollar, I would say, is more or less flat. It's kind of losing against the euro as well as the Swiss, but it's up big against the CAD. So it's kind of interesting how that's working out. But again, a lot of that is just going to be people aren't sure what we're going to do with FOMC and meeting notes later. And we've kind of gotten mixed signals off of it. All right. We'll cover oil and then we'll come back to it. But it's kind of important to talk about. And again, it all is kind of intertwined right now with G20, the economy. Kaplan is talking about it because remember, being a supply and driven, type market, the more demand and the more everybody's coming back to work, the more oil and gasoline they're going to need, which is going to also drive those rates. So right now, the last we heard about oil is that the API numbers, actually, if you click across Daily Effects, there's a great article up there talking about how oil is choppy and geopolitical risks. It does have an API recap. It's the kind of the second reading that comes out on Tuesday nights. And they're saying they have an expected down draw of 1.4 based off of what the API number was. We know right now that it's expected to be a down draw of -2. If it comes in at 1.4, that's not more than expected. So that could actually be something negative for oil. But right now, this is what the oil chart looks like. Okay. here's where we were yesterday morning, and we mentioned the levels of 70 or 60, 72, and $59. We ended up going up, touching it at 10:30, coming back down, and we're sitting right in the middle of the range yesterday for the long presentation at noon. Came down, we tagged the 59, we came back up again. We didn't make it all the way back up, but we did get back up to the level of basing right around like 60, 59, 90, 60. I guess it did break 60 right here. So we're kind of at that same level where we're sitting in the middle. We were looking for kind of a continued push, but unfortunately, it got a little bit too choppy. It ended up using 59 as a level to go higher. So I would still say that the $60.75 is still on the radar. It's about $1 away. This week, we have not seen the major push from the European session. The European session opened right here. There, I'll put it right here is the European move. Right. That's not what we typically see. Lately, we've been seeing it much bigger. It'd be like a move like this off the European session. There was a reversal about 4 o'clock this morning. So right now, I would say that this level lower is probably still on there around 59. Top side, 60, around 60, 75 would probably be also another good entry on top. The way that I would look at this, and again, we have 2.5 hours, or I guess an hour and a half at this point, until this oil inventory report comes out. Drop it down to like a 10 or like a 15, maybe 30, but probably a 15-minute chart. See where we go. We may actually end up pushing down here till the open. And if we're hovering around this $59 level, that would be a situation where I'd want to get long before the oil release. If we're still kind of meandering around and we're sitting up in this level, what I'd probably do is I'd probably wait for the oil release to come out, see what the emotional response is, and then play the counterplay to it. And again, if we pop up into the 60 level, wait for some type of a top where we have this and then it comes up and retests it, or vice versa when it comes down. And again, if we push lower, that would be another area. But right now, I would say my kind of 2 A-rated levels would be 60, 75, 57, 59, which is the level from earlier in the week. And then again, if we're sitting in this lower level down here around 59-ish level, there's a potential for maybe like a small maybe a shorter duration binary contract in there. Yep. We could get in there.
So I want to jump over and take a look at that on the Nadex platform, and it is rather interesting. I'm just I extended out our levels. You can see these gray levels around. I mean, there was some volatility. Those are levels that we could, we take them back, that we've actually had for a while. And oil was making some pretty volatile swings. It's now a little bit more range bound, chopping around in between the 2 levels you just mentioned, which is right around 60, 75 up above, and basically 59 below. Looking at the binary options, there are binary options to play if we get near these levels, looking for a move. If it came down to the 59 level, there's probably a way to take this from the long side, where, if it got down around here, if it got below this 59.20, got down to 59, you might see this, the 59.20 binary option probably trading in near 40, or thereabouts, depending upon how early in the day it was. So looking at the binary options, definitely a way to play this. Limited risk, limited reward, looking for an opportunity for a bounce off of 59 if we got down there. But the if this then that, if you end up seeing it up in the 60, 75 range, an opportunity to potentially take it short. Let's go ahead and talk about, that's oil. Definitely something we got to be looking at with the oil inventory report. And again, that is in an hour and a half. That oil inventory report will come out at 10:30 Eastern. 10:30 Eastern. So be on the lookout. We might see some movement this morning in oil. Now, this afternoon, 2 p.m. Eastern is the release of the FOMC minutes. So Brian, I'm going to flip this over to you, because I know this is something that people are going to be talking about all day long too.
Yeah, these are some headlines, or some quotes from Kaplan. Now, Kaplan is not one of the biggest movers. He's considered a yellow, kind of like a low impact news person, but he's been just all year with the headlines. So I don't know if he's trying to make more of a play to become more of a power figure inside of the Fed or what, but these are some of the highlights that he has said this morning. These came out about 5:30 this morning, that the economy is still in crisis, kind of, right? The non-farm numbers were absolutely amazing last week, blew the forecast out of the water, and appropriate for Fed to offer aggressive aid. Okay. Kaplan is unsure when the Fed will be able to par back support. Okay, and he has an upbeat outlook. He sees 6.5% GDP growth and 4% unemployment this year. Okay, we're at like 6 right now. That would be like a huge drop, and I mean that's kind of like at kind of the not all time, but pretty close to like all time lows as far as unemployment goes. But yet they need aggressive aid. So.
Which is it?
Not exactly sure if Kaplan's just going for headlines or what here, but I will say, I mean, again, this goes back to what Powell said last week about how there's the forecast and then there's the actual, the real, right? I mean, I know perception is reality for a lot of cases, but I don't know. This is kind of crazy. So, obviously FOMC today is going to be a big deal. They're going to talk about raising rates. He did say raising rates off near zero doesn't necessarily mean tighter monetary policy. Kind of does, but when you make it more expensive, yes, it does make it tighter. So I don't know. I'm not sure if he switched the tea instead of coffee or what this morning, but there's two things I want to highlight real quick. The first one would be silver. We were sitting right here yesterday. Actually, here, I could just circle it. Right here was our presentation yesterday on silver, and we mentioned being in kind of a small level. We talked about it ticking all the way back down, most likely here, and it kind of ground down. I mean, we went down, I don't know, about 40 cents, 45 cents in the overnight since that time. It's still very, very choppy. Gold is kind of a similar situation where, again, we're still hovering around this, 1742, same thing. We talked about this yesterday. We were sitting right at this level. Right here is when we would have talked about gold yesterday. And again, we knew it was a level. We talked about it before. It kind of played around a little bit, but we were really waiting for a cleaner entry up at that 1752. So it's pushed back and forth, and you can see it took a small bounce. So I would say, again, we know we have buyers that keep stepping in, and they keep stepping in right around here. I mean, they did it here. They gapped higher. They gapped right back into it. They bounced, came above, came below, hit in here again, hit it again, and then just hit it again. So this is obviously a level we need to watch out for. I wouldn't say that that's a buy here. The warning about this one is going to be FOMC. We really don't know what they're going to say. We've seen some of the comments. We've seen talks of slowly raising it. We saw a huge number with non-farm, which was great. Even if it gets revised, it's probably going to be okay. We've seen some dollar weakness already. And again, could this be positioning for a strong dollar speech today with FOMC? I think that the likelihood that we will see dollar strength coming out of FOMC is higher than if we see weakness. Okay. And if we go across, you can see that, right now with crude oil, more people are net long, which means not that 64 is a crazy figure, but I'd be watching that. And then gold, 81% of people are net long right now. So it's kind of like,
although that's down, that is down from when it was in the 90s.
Yeah, it's lower, but I would still say it's at the side where I'm kind of watching out for it. And like I said, gold's been kind of stuck here right now, right? We're just kind of, and this is a 30-minute. If I bring it up to like an hourly so we can see some more data, you can see here that, I mean, for the most part, we've gotten really range bound, right? We were kind of stuck here. We popped down and came back up. We popped down and came back up. This is kind of the intermediary. And again, if I draw kind of just using kind of the near term, the curve level, you can see that right there. Let me move this over a little bit. There to there is kind of what we've been kind of stuck in. And I'll go back down to lower time frames so you guys can see it. What do I say about the middle area, right? The no man's land, right? You can see we went fast down, fast back up. Over here, same thing, fast down, fast back up. But now it just gets stuck, right? It gets stuck, all right? I do think, though, they will start mentioning interest rates today. So I am very interested. And again, it's at 2:00. We're talking about, 5-6 hours away from right now. We really got to see with what the U.S. trader does at the open today, as well as we got to see what happens with oil, because there'll be some type of a gauge saying, oh, well, how much oil demand is there? That will kind of play into it, as well as the G20. Like I said, the G20 meeting right here, this is definitely going to be something that will also have some effect. And again, she's bringing up this global minimum tax on corporate profits. Again, nice try, Janet.
I don't know how you would enforce that, but it is rather interesting trying to get people to stop gaming the system. In regards to the minutes for the U.S. dollar, I know that there's something, we see some dollar strength. I mean, dollar has seen a little bit of weakness lately against things, particularly like the yen. I think we might. Do you want to take a quick peek at that one before we wrap it up this morning? Yeah,
dollar yen I think is probably the best setup to play the dollar today. So we were sitting yesterday. We were kind of bouncing in this area, and we talked about how we had this one, the Harry Potter. It did pull back. It went 2/3 of the way, and then kind of pulled back. We were sitting right here yesterday. You guys can see that yellow. We're sitting right there yesterday. I mentioned, if you're still in the trade, you're kind of right there. It's still positive. It made it about 2/3 of the way down. And what did it do? It came back again and then ended up going all the way through the profit target. I would say at this point, the one thing I like about this now is that obviously we have a touch there. Ooh, that's a gigantic one, but let's change this to yellow. Can you see it? Yeah. Actually, can't see it. Let's go to orange. We have one there. We have kind of a touch right there. We have kind of a touch there.
3.
And we kind of have a touch where we're at right now. So we're at that. It's time to break the level zone, right? So with that said, instead of taking this short, what I would do now is probably switch this the other way. Oh, I have to delete it. We can continue this box all the way across, kind of get that level of stabilization in there, coming up right around to the 110. So again, psychological level. And I'd flip this around and say, hey, listen, if we can get some type of movement through, now we can take this in a long position to the top side. And again, the 1 to 3 risk to reward target, which is the minimum that I set for, is here. This is a racetrack. This is a parabolic move. We're waiting for a retracement back up again, and we'd be looking for this to come back into probably this area up here, which would be right around 110.50. I could put a price tag up there. Right around 110.50. 110.48, super close. So again, that's a 50 pip mover to the top side, and that only has about 10 pips worth of risk. So it's not bad. If we can kind of go through this level and pull back before FOMC, this would give us the opportunity. And the catalyst for this would be them mentioning potentially raising interest rates. The economy looks great. Anything that is hawkish towards the economy recovering and the potential of moving interest rates or seeing inflation. Because remember, we see inflation. The counterplay is inflation, interest rate. Inflation, interest rate. They mentioned interest rates is strengthening the dollar and hurting the overall stock market. That would cripple the yen and make the dollar stronger and give us a push from here up to the top.
Yep. So I just wanted to bring this up quickly on the Nadex platform. I mean, you can see. I mean, the dollar's gotten hit. It got hit. It tried to rally back. It got hit again just yesterday. It's chopping sideways. It is touching this. It's just shy of 110, so call it 109.95. But it's hit it multiple times. 1, 2, 3. This is really the 4th hit where you'll often see that breakout. So keep an eye on the U.S. dollar yen today. If it breaks out and starts heading higher, there's an opportunity here, and. Could that happen earlier in the day? Yes, just from a technical level anyway, but we do have that FOMC later today, 2 p.m. Eastern, 1 p.m. Central, which is something else that could potentially impact this particular market. All right, I know we went a little bit longer today. Brian, I'm going to flip it back to you. Is there anything else that we wanted to chat about? Oil, I tell you, we are going to be talking about oil and gold a lot over the next month or two, because everything is about economic recovery and interest rates. In fact, we're going to be doing an entire boot camp. Our next boot camp event is going to be how to day trade gold and oil markets. You'll probably be hearing more about that in the next week or so, but keep your eyes out on the Nadex website for that, because they're important products to know how to trade and how you can take advantage of opportunities, particularly in a situation like this, where everything is around economic recovery and interest rates. These markets are going to be volatile for a bit, and they're ones that you want to learn how to keep your eye on. With that, Brian, is there anything else you wanted to drop in here before we let everyone get ready for the open in 25 minutes?
No, not today. That's it. Like I said, as we get closer to the news release, especially around FOMC, make sure you're looking at levels, see where prices move to. Again, after the initial open, that's where we're going to be able to kind of get a better reading on where we should be taking our positions.
Yep. Perfect. All right. With that, any questions for Nadex, please email us, customerservice@nadex.com. We are here to help. And if you're having any challenges, whether it's with our products or the platform or your account, if you're having a challenge, we can't help you if you don't reach out to us, so please email us, customerservice@nadex.com. Brian is also very accessible. You got questions for Brian, you can email him, support@keeptradingsimple.com. I know he interacts with a lot of you folks, and he's been getting a lot more engagement, a lot more questions, particularly with a lot of the new folks that are coming into the Nadex markets. Please leverage him as a resource. He's a great resource, and he is completely accessible. With that, we got oil inventory in an hour and 25 minutes. Keep an eye on those oil markets. We gave you some range, some areas to be looking at where for support and resistance in this a bit of a choppy market. And we've got the the U.S. dollar yen, an interesting one, where the dollar's seen weakness, but looking at a technical breakout level. But again, we got that FOMC meeting later in this afternoon. With that, Brian and I will be back tomorrow morning, same time. We will catch you then. Good luck in the markets. Thanks, everyone.